By two special guests. So we've got Shaz, the famous Shaz. How are you, Shaz? You okay?
Hi Ash, I'm good. Thanks for having me. Honored to be here.
So Shaz, and then we're also in the studio live. So we've got Shaz that's dialed in via Zoom, and then we've got Soren who's actually in the studio. So hi, Soren. How are you?
Hello, Arsh. I'm very well, thank you.
Soren's very nervous. He's very, very nervous about this. He's thinking, oh my
Yeah.
goodness. Right. Okay. So let's get started. So let's just, first of all, welcome everyone back to Ramadan Radio. So if you've got any questions, please feel free. You can either call in 01902 972 150. Even better, and we'll probably be able to pick on these a lot quicker, is if you WhatsApp the studio on 07440 420 432. Ask Shaz as many questions as you can because it's rare that you will come across a mortgage broker with as much knowledge as him. So again, that
Wow.
number 07442 07440 420 432. So, Shaz, introduce yourself. Who is Shaz? Where are you from? What's your background?
Thank you for the very kind intro, Ash. So yeah, my name's Shaz Ahmed. I'm a mortgage broker. I have my own brokerage in South Wales. Um, I've been in the finance industry for just over 10 years now and working specifically with investors for 5 years. And yeah, we arrange all types of finance, whether it's like short-term bridging development stuff or what landlords want, which is buy-to-lets, HMOs, service accommodation, all that funky stuff. And yeah, the market's been turbulent. I'm sure we'll talk about that now.
Okay, so let's talk about that because without stereotyping, Asian people like property. Asian people
Yes.
like property, so and then they like to be able to put their money into a property, whether it be for the short term, whether they make money from it from cash flow. Generally, and I'm going to stereotype again that Asian people are trying to look for the long term growth. Would you agree? Leave it for the kids.
Absolutely. I think generational wealth and handover of wealth is important to Asians.
Okay, cool. So, what's happening in the market right now?
So I think this all kind of kicked off. I mean, to be fair, there was an undercurrent of rates, base rates slowly creeping up, even all last year. But back when we had the kamikaze budget, which I believe was like August time, or just after August, that's when kind of lenders really decided to pull back. And it wasn't because they didn't have the money. So everyone who's comparing what's going on to the crash in 2008 needs to kind of get a grip. It's not that the money is still there. It's just the pricing does not reflect what the cost of finance is or was.
Or was it just that the banks they didn't? It's not that they didn't have the money; it's the fact that they were uncertain as well. So they decided to
Exactly
put
that.
the brakes on. They put the brakes on. They thought, well, hang on, we'll hike the price up. Those that still want to lend are going to have to pay for it.
Exactly. So the cost of the funds became a lot higher. It's settled down now though. So since they've essentially reversed all that budget, it's all settled down or settling down. But I think it's kind of important to remember that pre 2008, we've been in the UK, we've had low interest rates for such a long time, probably artificially to encourage borrowing, and that's why the UK is like a
It's a
debt
good
first.
point. It's a good point because for the older generation, they would have seen interest rates average around 6%.
Exactly,
Now,
exactly. So
because we, and we're talking we here, including Sarah in the studio, we've only ever known kind of interest rates at, sub 3%. And we thought that was the norm. Would you agree?
absolutely, and that's it. I think it's perspective, isn't it? So we're now getting back to rates where they should be really, the cost of the finance. So rates are settling down, but definitely not to the 3% or even 3.5%. We're looking more around 5%. What I do want to say is, just to make it clear for listeners and make it valuable, is when people see that the base rate has gone up by 0.5%, quarter of a percent, and so on, instantly I get a lot of phone calls from people going, "Oh, Shaz, it's going to affect my mortgage." So the base rate going up or down, it will only affect tracker mortgages that track the base rate. It's fairly
So
self-explanatory.
if you're on a fixed mortgage, does that bother?
So if you're on a fixed rate right now, and that fixed rate doesn't end until next year, 6 months, 2 years, whatever, it makes no difference to you. That rate is fixed. But also for new products, if you're buying something or looking to remortgage something right now, tracker mortgages don't really affect the rate that the fixed rate lenders have. What lenders do is they lend each other money, right? They call that a swap rate, a SONIA swap rate. That's what they lend each other money with. And depending on how long they lend each other that money for, they price that at a certain level. That swap rate is really what determines the interest rates for fixed rate mortgages. And that rate has been coming down month on month, not by a significant amount, but enough to make a difference where fixed rates are coming down.
But are lenders then passing that on? So let's
Yeah,
just imagine now, Shaz, that
yeah.
okay, the mortgage rates were slightly increasing. Let's go back to when were they increasing? Let's say, was it mid last year?
They've been creeping up, yeah, but mid
Yeah.
last year, yeah.
So mid last year. So just imagine that someone was on a 3%, then they went on to variable rate, they then went on to 5-6%. Then as a result of being variable rate, the interest rate starts to increase, and so it goes up from 3, 3.5, 4, 4.5, and then as a result, what happens in your scenario there, where their lending costs are reducing? Do they pass that back on to the actual homeowners?
They have been now, because again, there's I wouldn't call it a price war, but there's a mini kind of bit of competition and price war between lenders because the market has contracted. House prices are coming down, but the cost of lending is higher, so there's less transactions being done in general.
Yeah.
They're having to reduce rates to get that business in. But some lenders are being cheeky. So, Ash, you would know that again this time last year, typical buy-to-let mortgage, the arrangement fee on that would be 2% on average, right?
Yeah.
Which gets added onto the balance. Lenders nowadays, some of them are reducing the rates to getting them below 5%, but then the fee is 4 or 5%.
Yeah, it's crazy.
When you spread that fee over the 5 years or 2 years, it makes no odds. Actually, you're not any better off.
Yeah, but it's that thing that you see. Well, that 5% up front, isn't it? But okay. So, Suren, what do you make to that? Interest rates. What do you make to interest rates? So, on your current mortgage, are you on variable rate? Or are you on a fixed rate? How's it affected you?
I'm on a fixed. I managed to secure mine just before it shut up.
Oh man.
Yeah. So I'm a happy man for the next 5 years.
Okay, you fixed it for 5 years.
Yeah.
Just out of curiosity, mindset wise, why did you fix it for 5 years? Was it that you wanted the certainty?
Yeah, I wanted the certainty. I didn't want the surprises of all of a sudden it shot up by 3% or something like that.
Yeah. Had you done any calculations? So was that just by luck, or did you start seeing stuff and then you thought, well, in actual fact, this could be quite devastating?
Well, I listened to my mortgage broker really, and I thought it was a good idea.
Is your mortgage broker Shaz by any chance?
No.
No,
it's not.
Oh my goodness! Right, okay, Shaz, we've got a new client for you, live on air as well. So, okay, so Shaz, come back to you then. So, obviously, just with the theme of it being an Asian radio station with Ramadan Radio, we've got lots of listeners that are, shall we say, against lending where interest is charged. What's your thoughts to that?
I think that is an individual question to everyone's faith. You know, some people believe that in this country that if you have to buy your own house and that factors in interest, that's okay, but any other properties can't. Whereas some people, yeah, it's completely anti-interest. So yeah, I think that's an individual question. And
okay, from your point of view, so putting aside faith, and I'm talking to you, Shaz, now. So in terms of that, what's your belief behind it?
So I think my belief behind it is, interesting question. I think it's a conversation I have with myself many times, Ash, because obviously, again, the business I'm in is based on interest.
Yes, absolutely. Yeah, well, that's the whole point, because you're based as an interest-based business.
I'm a facilitator or a broker of interest. So yeah, it's an interesting conversation. I think for me personally, I am trying to pivot away and look at different avenues of business, but really, it depends on how far do you drill back. Even if you're in a 9-to-5 job, your employer would have made money from interest, or your pension that you're getting paid has got interest elements in. So how far do you go back and actually make sure there's no interest element at any point in that chain?
To be fair, that's a really interesting point, because so what you're saying is that there's always an interest element. So it depends on how far you want to go back with that.
Yeah. Can you sleep at night knowing you're doing what you're doing? Is it right or wrong?
Yeah, no, I get that. But with a mortgage application, if you, with the, going back to your scenario there, where the wages, where you kind of don't really have control over that. But if you're applying for a mortgage and someone knows willingly that their interest is going to be charged.
So I mean, look, with the Muslim clients that I get, some of them do say, Shaz, one of the key things is we want to look for the kind of Sharia compliant mortgages because of our faith. We can't be dealing with interest. And that's a good thing to know up front because straight away that eliminates like 99.5% of lenders out of the box anyway. They all charge interest.
So
But then,
the
yeah,
Sharia-based mortgages that you've mentioned there, how do they compare to the rest of the market? So in terms of rates, in terms of, are they more expensive? Are they actually competitive? Or is it because it's a niche market that's an expensive market?
it's slightly on a premium. So I'll just, again, if I gave an example, an average buy-to-let interest-bearing mortgage is about 5 to 5.5% right now, whereas kind of a mortgage in a limited company for Gatehouse Bank, I believe, is around 7% at the moment. So there is a premium to pay.
Right. Okay.
And often, and this is again, I don't judge, it's everyone's choice. Often, when I give someone the Sharia option, and they say, "Well, that rate is expensive," just out of interest, what would it be if it was interest bearing? And you tell them it's cheaper. Often they'll say, "Okay, let's just do this for now. Maybe in the future we can reconcile."
So even though they came in with the mindset that they wanted to have a Sharia-based mortgage, when they see the rate, what actually tips it over the iceberg is the fact that it's more expensive, and then they tend to go with a mortgage with someone like Shawbrook, someone like Lloyd, someone like Aldermore, etc. Lots of other products out there.
Correct, yeah.
Okay, that's an interesting point. Interesting point. So, in terms of mortgages right now, in terms of how hard is it in the mortgage market?
It's not. I mean, look, it's a little more difficult. I think lenders.
I suppose the question that I'm trying to get at is that for those that are looking to borrow and they're a little bit worried about it, what's the kind of affordability criteria? What's the criteria that you need to borrow funds? So, what's the affordability? Yeah, how they're working it on an affordability scale?
Sure. So when it comes to rental or buy-to-let properties, the amount you can borrow is controlled by the rent the property is going to produce, but they do it at enhanced levels like stress testing and so on. So this can vary. I'll keep it brief. So essentially, the rent needs to cover the interest-only payment, but at a percentage of 145 or 125%. That figure depends on whether it's a limited company and your tax bracket, but also it's not just tested at the rate of the product; it's stress tested at an enhanced rate, whether it's a variable rate or whether it's like a special stress testing rate. So it's always enhanced levels. What's interesting, Ash, is again, this time last year, because that is the reference point, the stress test would have been about 5.5%. And that is what people are paying right now on their mortgages. Yeah. So if you stress tested properly, you should be okay from a profitability level.
So I suppose another question they're going to ask is that when it comes to affordability, and you're talking about stress test, there's lots of people that get paid in various different ways. So lots of people that, for argument's sake, if you're a taxi driver, or you get paid in certain elements, and like you've got elements of cash, etc. How does that operate?
So yeah, I mean, I think you're referring to residential finance. So for residential mortgages, the amount is based on your income that you can actually evidence, not a stereotype like you did earlier, but people perhaps in our communities, they maybe take cash payments for certain things, or they don't declare certain bits of income, but then when they need to borrow money, on paper they're showing very little income. Unfortunately, it's not many way around it.
Yeah, because if we put it simply, when people always ask me, they go, "Yeah, how are we going to get a mortgage?" The reality is that the bank is still a business. Would you agree? And the bank absolutely want to understand that if they're lending you money, they want to be able to understand: are you going to be able to afford it? Are you going to be able to pay, keep up the repayments? Because ultimately, no one goes into the bank's not looking at it saying, "Well, I'm going to lend you money, but ultimately, I'm going to repossess you in a couple of years because we know you can't afford it from day one."
Yeah.
Would you agree, Shaz?
Yeah. No, absolutely. They need to make sure you can afford it and live your life to a certain standard. If you've got kids, they want to factor in affordability for their living costs, credit cards, loans, overdrafts. All of that has to be factored in. Like you say, at the end of the day, it's in no one's interest to have you on a mortgage that you can't repay. People always say, "Well, what if they repossess a house or this happens?" That rarely happens, but it's just you don't want to be in that situation. So yeah, you may think they're making it harder, but they're factoring in cost of living, inflation, everything else to make sure it's affordable.
Okay, so tell us about the mortgage market. So you started on that before I butted in. So How hard is it? So, for argument's sake, if someone's looking to get into buy-to-let, to get into a property and purchase an investment-style property, how difficult is it?
It's really, I think it depends on what your end goal is and where you want to invest. So where I am in South Wales, or if you're up north, kind of Hullway, you can still get a decent property for quite cheap. So in the valleys, 80 to £100,000 property, that would still rent for about 600, 650, which is decent for that figure.
So, based on that, so let's just imagine that you purchased it for £100,000. What's the kind of rental income that you're generating off something like that?
Something like that, about 600, 650.
Okay. So, and then
Not bad,
what's
is it?
no? So, what's the kind of yeah? Because if you base that on, and what would that be, like a 2-bedroom or 3-bedroom terrace house?
That'd be a 2 bedroom, but then you could go in and convert it to a 3 bedroom. Again, maximize the rent even further.
Okay. So, is that by utilising one of the living rooms, or is that by making one of the bedrooms upstairs smaller? Or
It depends on floor. I think the floor plans in the valleys tend to be downstairs. Like
right?
downstairs
Okay.
room can be turned into a
So they've got 2 reception rooms. Okay. So, and then off the back of that, you rent it out for 650s for the 3-bed. So, what's the kind of cash flow on something like that?
So the mortgage on that, I'm doing some quick maths on it now. So
Yeah, yeah.
£75,000 mortgage.
Are you still using a standard press button calculator? Shaz, I thought you would have been one of these whiz kids on oh man, I thought you would have been one of these whiz kids on computer that just yeah, okay.
But you're looking at about payments of about 350 to 375.
Okay.
But again, if you're living in, say, the Midlands and you want to have a property there, you can get someone to manage it. They'll take their 10%, 15%.
Yeah, of course, yeah.
It's still not bad, if I'm honest.
So
Because
on
the
a
cost of
stress
it-
test point of view, coming back to that.
Yeah.
So if you're purchasing something at £100,000 and it's being rented out already at 650, would that pass the stress test?
Absolutely. And in terms of the stress test as well, guys, on a buy-to-let mortgage, just to help out, let's say you want a 2-year fixed rate because you want to be able to refinance in 2 years, or you think rates are going to go down, whatever reason. The stress test on a 2-year fixed rate is harder than a stress test on a 5-year fixed rate. So if you find that your broker says, look, if you want a 2-year fixed rate, you can only borrow 65, 70% loan to value, but you want to borrow 75. If you change that to a 5-year fixed rate, you can borrow the full amount because a stress test is easier.
Okay. Well, we're going to go into a break in a few minutes, but when we come back, I want to ask you the important question: interest only versus capital repayment. And so we'll talk about that, but we've got a few minutes. So, okay. So in terms of lenders out there right now, so we've talked about some Sharia. So do you want to talk about a couple of the lenders that are out there at the moment, or kind of what their criteria is?
Yeah, I'll name 3 or 4 lenders actually that are kind of on my books, as it were. So Gatehouse Bank and Al Rayan, they're the 2 biggest Sharia compliant lenders in the market. They do residential mortgages for houses you're going to live in, but they also do buy to let. Because of the way they're funded, as in it's not UK money, they're also okay with people like expats and foreign nationals, which a lot of the mainstream lenders aren't anyway. So you can do some creative stuff with those guys. Now, I deal a lot, as I mentioned, with investors, and often investors will buy, renovate, and refinance. So for that initial buying and renovation, you can't go onto a mortgage. You need something like bridging finance or investors or cash. Most bridging lenders, again, will charge interest, but there are now, the main kind of bridging lender that is Sharia compliant. They're called OFFA, OFFA, based out in London. So they offer Sharia compliant bridging finance. So again, you can now, if you really want to, go from end to end, do a whole buy, renovate, refinance, and keep it all Sharia compliant as well. And there's also a new lender that kind of connected to me on LinkedIn called Stride Up. They offer home purchase plans, which are more residential mortgages as well, but in a Sharia compliant way. So those are the kind of 3 or 4 in the market. It's not a massive market at the moment. I think it is underserved.
Okay. And then in terms of, so you've got those, and they're the Sharia compliant mortgages. In terms of, okay, so if someone was didn't really care about Sharia, and they wanted to go out to the main markets.
Then you've got, the way I look at that is you've got tiers. You've got your tier 1 lenders who are on the high street, Lloyds, Barclays, Halifax, those kind of big banks, corporate banks. Those are high street lenders. They won't do anything that's not vanilla or mainstream, but they're there. But once you start being a professional investor, limited companies, HMOs, those kind of things, you have to look away from the high street, and that's when you might need a broker. But those are lenders like Shawbrook, Kent Reliance, Paragon, Lendervest, names you've never heard of probably, but they exist and they're massive entities all in London and Canary Wharf. And then you've got your tier three lenders, who are either the commercial lenders, again, Shawbrook, Hampshire Trust, or niche lenders for the weird things like expats, foreign nationals, adverse credit. So but I break them down in three tiers. I rarely work with tier one lenders. It's mainly the specialist market.
Okay, so you don't really work with high street lenders in essence. You go out to tier
Yeah, I
two, tier
mean,
three. And why is
exactly.
that, just out of curiosity?
I think if someone had a deal or something that was going to fit with a high street lender, they generally, and this might sound silly, they probably don't need a broker anyway because they're so vanilla and mainstream. They can just go to the branch and get it.
Okay, fair enough. And then stuff. So, if we start to get a little bit more strategic with the property, so when you've got a multi-let, so where you take a house and you chop it up into rooms, and you rent it out on a room by room basis, are they the tier two lenders?
Absolutely, yeah. There's only, I believe, BM Solutions or Birmingham Midshires. They're okay with that, but only if it's on one AST, like a student let.
Yeah.
Other than that, you have to go away from the high street.
Okay, so we could talk about different types of lending all day because you've got your standard buy-to-let, then you've got your multi-let, and then with your multi-let, like you said, you've got multi-lets which are only on a single AST. You've then got multi-lets which are on multiple ASTs. You've then got multi-lets which have got own en suites. You've got multi-lets which have got, almost like mini studios. Would you agree, Shaz?
Absolutely, you can. Then you've got more. You've got semi-commercial, so you could have a shop below and flats above.
Yep.
You could have, and the most popular thing I see these days, and again in the Midlands where you are, is service accommodation, Airbnb, short-term let.
That's interesting. So what's the kind of criteria for that? What's the kind of rates that you've got out there for that right now?
I'm glad you asked, Ash. So with that, again, there's two types of lenders. So you've got lenders that are kind of looking for more traditional holiday lets. They are kind of your niche, small building societies. They understand that it's seasonal demand. But what they'll do is they'll say, okay, look, for this property, we need a letter from a local letting agent. That's a holiday letting agent, giving us high, low, medium figures, region average. Now, these kind of properties won't work on an AST figure because the property might be in a free location or it's just not that kind of demand. But the lenders understand that. And they might even let you live in that property for 90 days of a year because they understand it's seasonal.
Okay.
That's holiday lets. The more common one that we do, though, is short-term lets. This could be where essentially a property on Airbnb, a house on Airbnb, a flat, an apartment on Airbnb. All lenders are concerned with is that there's no restrictions in the title on the lease if it's a flat or an apartment. But what they do for their assessment is instead of looking at how much money you think you're going to make, they'll just look at it based on AST income. So if it was on the open market, how much would it rent for? Pass the stress test, happy days. You can put an Airbnb and do what you want.
Okay, interesting. And have you seen that there's been a big boom in that?
Yeah, absolutely. Because from a cash flow perspective, spot on. And also, I mean, we could again talk for ages. There's the guests, they pay before they come. There's all this kind of benefits in that. And I believe you can offset some costs as well. So a lot of the investors are now kind of pivoting onto this because they can make more money.
But yeah, okay. We're about to go into a break in about 30 odd seconds. So what we can do, we'll touch base on that. Suren, have you got anything that you want to throw in there for before we go into break?
I think it's been very interesting listening to you, Shaz. Definitely, and all the various options there are. I've spoken to Arsh earlier today about service accommodation because that seems to be booming.
Okay, well, what we'll do is that we're going to pick up on that just after the break. We're going to have a short break now, and we'll see you after the break.